Hello, everybody. Anthony from Trader's Ultimate Edge here. We'll look at the day today. Of course, nothing really happened until the FOMC minutes came out. These are the minutes from the last meeting, and they give us a much deeper insight into what was going through the minds of the committee as they discuss things. And the big thing that everybody was waiting to hear about was balance sheet runoff. So the Fed maintains a balance sheet of securities that they bought, mostly actually treasury bonds that they purchased. And the big question was whether they were just going to start selling those things off willy-nilly or not. And there had been some discussion leading up to this about what was going to happen specifically with them. And in those minutes, they did not talk about selling them off. It was very much a wait and see approach. It was very dovish in its language. They're thinking maybe in the third quarter they're going to start to run it off a little bit. But part of the big deal too was, are they just going to sell treasuries straight into the markets, which would cause a problem. If they were just going to sell them right into the markets, it'll mess with the yields. Or were they going to just let them mature off of the balance sheet? And the language was pretty dovish. So it kind of sounded to me like they'll probably just let them mature off the balance sheet. They didn't specifically say that. They said, it's going to be wait and see. We will address it at the time and make sure it's consistent with our goals of maximum employment and price stability. So it was a pretty dovish sentiment from what the market was expecting, and that's why we've had this push up here today. The Fed funds rate futures also dropped a little bit. Now we're below a 0.5 rate increase in March, which if we stay down there and then we get that 0.5 in March, that could be a problem when we get to that meeting. But, we'll talk about that when we get there. Overall, for this year, the Fed funds rate futures dropped to 5 to 6 increases from 7. Now, I think 7's probably much more likely. I think 2% at the end of the year is much more likely. But we'll see. Anyway, all of those did drop, which I don't like because that means less is priced into the market now. But this does give us a lot of clarity, I think. Well, not a lot of clarity, but it reduces some of the anxiety around what was going to happen with that, with the balance sheet runoff. Because now we know that, hey, they aren't just going to dump this thing into the wind and saturate the bond market. They're going to go much slower with it, and that has kind of eased everybody's minds a bit about it, so that's a good thing. I do think the markets, now barring any news from Putin and Ukraine, I do think the markets can crawl upwards the next couple of days. I don't expect this to just shoot like a rocket ship to 4,700. That's not going to happen. But we could definitely see a move up, maybe a total of 1.5% over the next couple of days. I would like to see the likely target. Maybe this area up here, the low 4,500s. I'd like to see that. I think that's definitely a possibility to end around Friday if we don't get any more Putin news. Putin is the big issue right now. There's just been news back and forth on this guy. I'm reading it all day long. He's withdrawing troops. He's not withdrawing troops. I mean, you can't really keep this straight. The president of Ukraine, I kid you guys not, he actually made a joke about an invasion happening today, and I don't really know what to say about that. I think I mentioned that on Monday. So anyway, barring Putin news, I think we're going to climb upwards. If there's Ukraine news, then God help us. If it's bad news, I don't know where the market's going. It's going to depend on how bad. But if there's good news, if Putin does pull back, if he does pull back from that border, then I'd say the minimum we'd see is low 4,500s. I think right now a lot of the market is really worried about the Ukraine situation. Because, if that pops off, there's economic sanctions against Russia from, all of NATO and from us and from other countries, then that's going to disrupt the global supply chain, which is going to just make inflation worse. So it's a really serious issue. And I think if that situation happens to resolve the next couple of days, I mean, I don't know if it will or not. It's a really fluid situation. If it does, I could see us retaking the 100-day. I don't think that would be a problem. So we've got to keep our eyes on the news. Don't trade without having the news up. I've been using financialjuice.com. It's a really good website. So, all right, that's what I have for everybody tonight. I hope you all have a nice evening. I'll talk to you tomorrow. Take care.